Although the COVID-19 pandemic is still impacting our everyday lives, it is somewhat comforting that since last year's AGM, there are now effective vaccines and more than 70% of Australians aged 16 and over are now vaccinated. It was in the second half of 2020 that successful vaccines were first approved in the United States and mass manufacturing commenced. Global share markets reacted extremely positively to this development, as investors chased growth and other stocks which would benefit from reopening economies, while shying away from the infrastructure sector's more defensive qualities. However, the path to reopening has not been as smooth as markets exuberantly priced in initially, with the Delta variant of the coronavirus leading to further lockdowns in many countries. Throughout this period, global listed infrastructure has provided steady gains and, importantly, been true to label, whilst broader equity markets have raced ahead, albeit with some volatility. Argo Infrastructure's investment approach, business model, and operations have remained unchanged throughout the pandemic, and our people have been able to work remotely as required. For financial year 2020, Argo Infrastructure reported a profit of 18.8 million. Whilst the dividend payouts from broader global equities fell sharply due to the pandemic, the income generated by our portfolio was only slightly down on the previous year, illustrating the resilience of infrastructure returns. Argo Infrastructure remains in a strong financial position, with more than 350 million in assets at 30 June and no debt. The company was again able to raise dividends this year, increasing full-year dividends by 6.7% to 8 cents per share, fully franked, representing another record high payment to our shareholders. Argo Infrastructure continues its track record of generating sustainable total returns to shareholders, with dividends paid since inception now totaling 32.25 cents per share. Furthermore, this year's final dividend was the 7th successive fully franked dividend. A key benefit of investing in international assets through our Australian listed investment company, or LIC structure, is our ability to generate franking credits for Australian investors when we pay company tax in Australia on income received and on realised gains. Argo Infrastructure's dividends are derived from realised gains on sales from the portfolio and from the dividends received from the companies in the portfolio. Dividends are not paid from unrealised gains. This helps safeguard the sustainability of future dividends, as well as the capital position of the company. The global listed infrastructure sector returned a solid increase of 8.7% for the financial year, while Argo Infrastructure's investment portfolio rose by 9.2%, providing another year of index outperformance by our portfolio manager, Cohen & Steers. The Australian dollar appreciated from 69 US cents to 75 cents over the financial year, providing a headwind to our returns. Nevertheless, every one of the 10 infrastructure subsectors generated positive returns in Australian dollar terms. The more economically sensitive subsectors were the strongest performers during the year, with marine ports jumping 53%, midstream energy up 27.5%, and railways up 16.1%. In contrast, the performance of the more defensive subsectors, such as utilities, were subdued, with water up 2.1%, gas 3.6%, and electric up 4%. The share prices of many listed infrastructure companies, which invest in global equities, tend to trade at substantial discounts to NTA due to a number of factors. In mid-2018, Argo infrastructure shares were trading on the ASX at a discount of around 15 to 20% to NTA. At that time, the company was in its early stage and was just starting to establish its reputation. Since then, our track record of increasing reliable, fully franked dividends and continued portfolio outperformance have contributed to a substantial progress in reducing the difference between the company's share price and its net tangible asset backing per share. By August 19, the discount was under 10%, and now it's around 2 to 3% and often trades at parity with NTA. Argo Infrastructure's demonstrated track record of performance has also occasioned a lift in our research ratings. Independent investment ratings firm Lonsec recently published its latest research report on Argo Infrastructure, upgrading the company from investment grade to recommended, the second highest rating offered by Lonsec. In addition, independent investment research also initiated coverage of Argo Infrastructure in August, and they also assigned a recommended rating. Earlier this month, we offered our second share purchase plan, or SPP, to shareholders. These offers are very popular as a way of increasing your holding by up to $30,000 without the need to pay brokerage fees. The SPP was well supported, with 2,460 shareholders, or 26.4% of our shareholders, participating to raise $31 million. The additional funds were able to be invested almost immediately, given the large and liquid nature of global listed infrastructure sector. Over the past 20 months, we've seen a period of massive fiscal stimulus, at or near zero interest rates, and large quantitative easing or bond buying programs by central banks. We may see some volatility in markets as these policy settings are unwound. It is during periods of volatility that the relatively stable and defensive characteristics of infrastructure tend to be noticed most. Although the threat of inflation and higher interest rates will impact some infrastructure subsectors, President Biden's US infrastructure package, currently in consideration in the Congress, and tax changes will be a clear positive. Longer term, we see secular trends such as the digital transformation of economies and the transition to renewable energy to be significant drivers for the infrastructure sector. As a closed-end listed investment company with no debt, Argo Infrastructure is well placed to benefit from the long-term growth and income potential of the global listed infrastructure sector. In conclusion, I'd like to thank Jason Beddoe and his team for their ongoing efforts. It's been a difficult year and people have adapted well and shown great resilience. I'd also like to thank our portfolio manager, Cohen & Steers, and the firm's team of investment professionals based in offices around the world. It's been difficult for them all. I'd also like to thank my fellow board members for their valuable contributions to the company through what has been another challenging year. And most importantly, I sincerely thank our loyal shareholders, and to our new shareholders, welcome to Argo Infrastructure.